Good evening, everyone, and welcome to the Brian Crombie Radio Hour on Saga 960. I want to introduce you again to Mark Borkowski, who is the president, CEO, founder of smart guy behind Mercantile Mergers and Acquisition, which is a mid-market M&A firm, both representing sellers as well as buyers, and a really smart guy that follows the capital markets and what's going on around the world from a market standpoint really closely. And he reached out to me and said, Brian, you got to talk about Evergrande again, the property real estate development company in China that back, when was it? September, Mark, I think we first talked about it because it was, teetering on collapse. They were saying they weren't going to meet their interest obligations, and people were worried it was going to trigger a big problem. And then we haven't heard much from it in the last little while. And you emailed me that this is a concern that we should be very mindful of. How are you? Welcome to our show, and tell us a little bit about why you are really concerned about Evergrande.
Well, thank you, Brian. I mean, I do mergers and acquisitions, but I have been following Evergrande. I have advised a number of institutions who have invested in Evergrande. We're concerned because today, Hugh Kai-Yun, the chairman of Evergrande, sold 277 million shares, equivalent to $64 million in proceeds to him. In November, he sold 1.2 billion shares, and he's decreasing his position. Nobody is noticing this huge behemoth. They claim that it's a $400 billion deficit at the moment. True estimates, it's closer to $700 billion. The Chinese real estate industry at the moment represents about, in terms of debt of all real estate, equivalent of unsecured debt of equivalent to $5 trillion US. That's massive. Most of the investors are American, Japanese, and European investors. They're institutions who have acquired bonds and various other instruments and are sitting there right now exposed. The Chinese investors got out in the spring, most of the big institutions. However, there is some good news. There is something called distressed buyers. So the distressed buyers are people who buy debt at a discount, and they're betting on the fact that Evergrande and all the other real estate developers are not going to go bust, even though they've been declared in default. So in private equity, they're referred to as secondary funds. So secondary funds generally will buy investments from private equity groups that want to exit at between 15 and 20% discount. At the moment, the bondholders worldwide are selling off their bonds at 60 cents on the dollar. So distressed investors who are taking a big gamble will make a big bet, big score if they stay in and if there is a recapture of value.
So they're selling them off at 60% of, so a 40% discount. And you're saying
that's correct.
And so that the distressed buyers who are only really counting on a 15 to 20% discount could actually make money versus what they typically buy at.
Correct. The big hedge funds, and there's two major hedge funds that are buying up this distressed debt that are believers. One is a Hong Kong group called Lim Advisors, and they've been buying up every single day, every bond available at a discount at about 40%. And the other is Goldman Sachs Asset Group. They're buying up this distressed debt. So there's good news and bad news. If you are a believer and you believe that, I mean, this is all of these securities are backed by real estate. The real estate's not going to go away. I mean, it's going to sit there. They're undeveloped properties, but they're established properties that have been built and growing and collecting rent, but overdrawn in debt.
Okay, but if someone's buying at a 40% discount of the debt, then they're counting on the equity is gone.
Correct.
And 40% of the 40% more of the profit. And so what I have no idea what the metrics would be in China, but in North America, it'd be what, 25% equity financing, 75% debt. So if the equity's gone You got 25% of the value gone. And then you're talking about the remaining 75%. And then 40 of that 75% is gone. So you're down to 28, call it 30 of the 75. So you're at 45%. So you're less than half of value. So if they think that real estate is going to keep at least half their value, then their bet's good.
Absolutely. So, I mean, there is an opportunity for distressed investors to make a huge upside. So there's good news here as well. There's a lot of bad news because we're not getting any dependable information out of China at all. Nothing that I mean, the propaganda that's coming out of Hong Kong with the various institutions that are saying, stay in, relax, be happy, don't worry, is unbelievable. However, the official Chinese government reports are, we are not going to be supporting the debt. They are sitting on their committees. They brought people in to sit on committees to sit and review the insolvency. But as of Thursday last week, Fitch declared them as in default and insolvent. So we're now waiting for bankruptcy proceedings. Listen, at 60%, bondholders will be rushing for the door, believing they only may get 12, 15 cents on the dollar. So for every default, there's an opportunity. However, I'm working with institutions who came in at 100 cents on the dollar, and at the moment probably would be very happy if they could get out at 60 cents on the dollar, maybe 50 or less.
We're chatting tonight with Mark Borkowski, President, CEO of Mercantile Mergers and Acquisitions, about Evergrande in China and the real estate development business, the real estate business in China. We're going to take a break for some messages and come back more with Mark in just a minute. Stay with us. Welcome back to the Brian Crombie Radio Hour on Saga Night 60. Our topic tonight is the real estate property development company in China called Evergrande. And our guest is Mark Markowski, who is the president, CEO, founder of Mercantile Mergers and Acquisitions. It's an M&A advisory firm here in Toronto. Mark is an expert at buying and selling mid-market firms, but he's also someone that follows very closely the capital markets and has a couple of times over the course of the last couple of months raised concerns in regards to Evergrande. Mark, let's take a step back. Let's remind everyone who Evergrande is and how big they are. Can you tell us a little bit about that, please?
Evergrande is the largest real estate development company in China by far. They're one of the largest real estate development companies in the world, currently sitting with reported $400 billion of debt. Off balance sheet, there's probably an additional $300 billion of debt, and some estimate more. An incredibly indebted real estate development company that represent more than 5% of China's GDP. However, they're not alone. There are 4 other large real estate development companies who are not of the same size as Evergrande, but they are also have teetered on the verge of bankruptcy. Who are the investors? European, US, Canadian, Japanese investors. The Chinese investors were given notice to get out in the spring. So pension funds, the Canada Pension Fund is a very significant investor in Evergrande. They're currently sitting wondering what to do. They've got their finger in their ear. They've invested at 100 cents on the dollar. Their investment may end up being less than 50 cents on the dollar, and estimates from some American regulatory bodies claim it might end up being pennies on the dollar by the time this is all said and done.
So tell us, if you could, why these 5 sizable Chinese real estate companies have this challenge. Is China just overbuilt? Has it been lent too much money? What's your prognosis?
China grossly overbuilt. I mean, there was cheap money. I mean, interest rates are, for all intents and purposes, considered to be free. So these major development companies rolled out these massive developments, many who are sitting vacant. I mean, I can relate to various developments that are just sitting vacant for the last 2 years. Huge condo developments that have not been occupied. Industrial complexes unoccupied that were developed and built. There's a sports stadium that's never been occupied. So all these projects were approved by the Chinese government. Foreign debt poured in because they were attracting foreign debt at a premium to what you could borrow. As you could borrow at 4%, they were paying 11%.
Mark, help me understand this. You've got, a billion plus people, and we see pictures still of, people living, peasants living in squalid conditions. How can there be all these condos and towns and developments sitting empty?
Surprisingly, there's a lot of money. There's a new middle class emerging in China. I mean, we believe that people there work for insignificant amounts of money on an hourly basis. There is a lot of pent up demand for these properties. There are people sitting, hundreds, over 100,000 people waiting for these condominiums to be built in China. They're probably the only people that are going to be hurt by this whole calamity. Small property owners who are waiting with deposits, they're going to lose their deposits in condominiums, apartment buildings, and other complexes.
Why? Because if they're built, they'd be able to move in. So what you're saying is they're not finished yet.
They're not finished. So there's a lot of uncompleted projects. About 26% of Evergrande's developments at the moment are not completed. And the vast majority of those are condominiums that Chinese investors, homeowners have put down deposits, almost guaranteed that they're going to get wiped out. But that's not the concern. The concern are the big institutions, the pension funds, the insurance funds, your pension, my pension, that's going to be challenged by the fact that Evergrande is not going to be able to meet interest payments, never mind paying equity payments.
I think one of the other reasons, just going back to what caused this problem, is that the typical Chinese investor, number one, was scared of the stock market because of a lot of stock market crashes that have occurred. Number two, used to take money out of China, and the restrictions were put in place such that they could no longer take money out of China as easily, at least. And so therefore, real estate was seen as one of the most safest investments. And a lot of, from what I understand, the newly rich or the new middle class were buying up real estate as an investment, as well as a place to live, but as an investment, a place to hold value. Just like, frankly, we've heard complaints or comments about, a whole bunch of foreign investors buying up real estate in Canada as a place to put cash and secure value, such that you had a lot more demand than natural demand because you had huge investor demand in China for real estate as well. Is that, do you think, true?
That's absolutely correct. Chinese investors today cannot exit and send their money outside of the country as easily as occurred 5, 6, 7 years ago. There are restrictions. So Chinese have been trying to repatriate or expatriate their money out of the country. So their only hope of investing was the stock market, which many are very leery and very skeptical of. So the average middle-class Chinese family were buying up real estate investments in addition to home owning. So, we have a middle-class manager of some Hong Kong company owning 5 or 6 condominiums that are currently at the moment vacant or have not been built yet. So not only are the institutions going to take a hit, but all these middle-class Chinese investors and citizens that are going to take a big hit.
I got to tell you, Mark, I was in Shanghai a couple of years ago, and I was astounded at the real estate development pavilions and presentation centers all over the place that were showcasing these master plan communities that were being built out in the suburbs or exurbs of Shanghai, and they were gorgeous. They looked like master plan communities you would have in Florida, with canals and clubhouses and gorgeous amenities
and golf clubs.
They were just a typical middle class person that was living in a pretty small condo in Shanghai was snapping up these things.
And they were all buying them with leverage because debt was cheap. So they were being encouraged. As you say, the presentation centers, they were on every corner, buy a condo. So as I say, there are middle-class people that some middle manager working for a Chinese company, a Chinese government-controlled company that owns 5 or 6 condominiums.
But even then, people were talking about, is the property market going to collapse? That they thought it was in a bubble, and it just kept on going up.
It's no different here. I mean, look at the Toronto real estate prices. Look at any major center in North America at the moment. What is going on? Real estate is booming worldwide. It's a great asset class.
Why? Why is it booming?
It's a great investment. Real estate has always been considered to be a great investment.
And so it's just because it's a stock of value that people have more confidence in than others. That's why it keeps going up.
Absolutely. I mean, old school thinking is real estate. It's there. You can touch it. You can feel it. Stock market's been very vulnerable, very volatile. So Chinese investors have stayed very clear of the Chinese markets. They've listed on NASDAQ. They've listed on the New York Stock Exchange. So we've seen, the surge to buy real estate. Chinese investors have been buying up every possible available piece of real estate.
So you're
and
talking
that's still
about
going on.
You're talking about
However, most of these projects are uncompleted. So the average middle class or lower middle class Chinese investor is going to take a hit.
So you're talking about these 5 Chinese real estate development companies. You said the Evergrande, the largest, had $400 billion in debt. Any idea what the aggregate debt is for all of them? It's got to be close to $1 trillion.
The aggregate debt reported by Citibank on Friday, and it's an astounding number, is $5 trillion. $5 trillion.
$5 trillion.
$5 trillion.
And
nobody in North America has digested that number as of yet. Nobody realizes what the implication will be of a collapse of $5 trillion. The Hong Kong journalists who are spewing propaganda are claiming this is all going to pass. This is not a Lehman moment, but it is. We're talking about $5 trillion of bad debt.
And you're saying that Fitch just last week said that Evergrande was insolvent.
Technical default, insolvent. No reverberation. Markets didn't react today. Nobody noticed. Nobody's taking notice of this fact that there's $5 trillion of
okay, but only
debt.
one is insolvent. Is that correct?
Evergrande is insolvent. 4 others have been declared as being insolvent before the end of December. Year end, there will be 5. The 5 largest are all technically insolvent. Evergrande has been declared as bankrupt.
So why is the market not taking notice? If what you say is true, that Fitch has declared Evergrande insolvent, that the debt is trading at 40 cents off 60 cents on the dollar. If the Canadian Pension Plan and other people are big investors and are going to suffer big losses, why is the market not noticed it?
Yeah. I want to ask you the same question. I've been watching the all major markets today and over the weekend, and there's been no reverberation. Nobody seems to notice. We're talking about $400 billion of bad debt with Evergrande, unreported probably another $300 billion. In total, all real estate debt of all the real estate development companies that are insolvent of $5 trillion. There has to be some kind of reverberation. Maybe it'll come tomorrow. Maybe it'll come the next day. But the institutions are sitting very quiet, waiting for some kind of miraculous announcement.
Well, I remember
the Chinese government are not stepping in. They've made it very clear they're not bailing out these developers. And why are they not taking out these developers? Why? Because the vast majority, probably close to 80% of all the debt, is held by non-Chinese. Why would I bother? My citizens, my public, our investors are, for the most part, protected. Let North America, let Europe, let the Japanese investors take the hit this time. They're pretty smart.
Well, I remember reading that book, The Big Short. You probably read it as well.
Oh,
and,
yes.
and watched the movie. And up until, was it Bear Stearns or Lehman first? I can't remember.
Lehman first. Well, Bear Stearns first. And
Bear Stearns first. Up until Bear Stearns actually went bankrupt, people weren't expecting the bankruptcy and were shocked by it. And then even after Bear Stearns, they didn't think it was going to go wider until it went to Lehman. The people that were betting against Bear Stearns were having to mortgage their homes to keep their short positions in place because the market was moving so aggressively against their bet that the real estate market was going to collapse. And so up until it happens, a lot of people don't ever think it's going to happen.
Well, it happened on Thursday, and there's been no reaction from the markets as of yet. Fitch declared them as insolvent, in default. Normally, anywhere else in the world, that would have caused a shockwave and some major concern. Nothing has happened yet.
So are you buying shorts
400
on Evergrande?
Sorry?
Are you buying shorts on Evergrande?
Not, I don't have those kind of strong guts. Not at the moment, but I'm following all the distressed buying funds. The hedge funds buy up distressed debt. And distressed debt is very available. Today, you can buy this debt at 60% of value. Tomorrow it might be 50%. They are betting on the fact that this is real estate and that someone will salvage this real estate and it'll clean itself up and they'll make a 40 to 50% return on their investment. Not bad if it succeeds. However, institutions at a certain point have to exit. And right now, all we're waiting for is dependable information, which we do not have. The only insights we have right now are from Citibank in the US that have provided information that in itself is still not reliable. We are not depending on any information coming out of the Chinese government. We're standing by and watching.
We're chatting tonight with Mark Borkowski, the CEO of Mercantile Mergers and Acquisitions in Toronto, about Evergrande, big real estate development company, real estate company in China that, according to Fitch, is technically insolvent and in default. We're going to take a break and come back more with Mark in just a minute. Stay with us. Welcome back to the Brian Crombie Radio Hour on Saga 960. We're chatting tonight with Mark Borkowski. He is the president, CEO, founder of Mercantile Mergers and Acquisitions, a M&A mid-market company here in Toronto, Canada. We're chatting about Evergrande, which is a big real estate development company in China that has got $400 billion in debt. Mark says it's trading at 60 cents on the dollar right now, that hedge funds, distressed debt funds are coming in and buying up the debt. Mark, 400 billion.
Reported 400 billion, estimated at 700 billion.
Okay. If it's trading at 40% off, that's close to, 160 to 200 billion dollars.
Yes. Reported.
Let's say it's the 700 billion that you said. That's 300 billion dollars of losses. How can the world financial community, major pension funds, institutions suffer a $300 billion loss? How do you do that?
Well, nobody's noticing. How can they? That will affect your pension. Canada Pension Plan is deeply invested in Evergrande.
How much?
I mean, they're going to suffer. They're going to suffer a significant loss.
Any idea how much?
No estimates. Canada Pension Plan have refused to release any information in regards to their investments in Evergrande. Frightening. They're being pressed. The media are all over them, asking for what the exposure could be. It could be as significant as a loss for CPP this year.
Just out of interest, any idea?
Your pensions are at risk.
Any idea how big was the Bear Stearns or Lehman Brothers loss? Any idea?
All told, Bear Stearns about 38 billion, insignificant compared to the size of this deal. Lehman was just slightly higher at 43 billion. We're talking about 400 billion reported and another approximate $300 billion of bad debt. And that's only Evergrande. The other four real estate developers who've all been targeted as insolvent total about $5 trillion US in bad debt. Never in the history of the world has there been this kind of insolvent position in any company anywhere. But that's only one of the main number of many issues that are confronting China. So as we were all told, invest in China, the returns are great, and they were. Evergrande was borrowing money from bondholders in North America, Europe, and Japan at a premium. So if you were an average investor, a pension fund investor, an institutional investor, you invested in China. Today, you are going to be facing a significant loss on the investment.
So Bear Stearns, Lehman Brothers are minuscule compared to this.
40 billion compared to 400 or 700 billion. And
what about the subprime crisis? How much do you think was lost in that 2008 financial crisis?
That probably totaled no more than probably about 84 to 85 billion dollars. Still, a quarter, less than a quarter of what this large deal is going to impact the world.
Okay, so what do you think is going to happen if you're right that this is a calamity that no one's noticed as of yet, and it is order of magnitude, call it 4 to 5 times larger than the financial impact of the global financial crisis / recession in the Great Recession in 2008. And major institutions worldwide are losing $250 billion or more. What's the impact? Is this another global recession?
Absolutely.
Is it a stock market collapse?
I can't see it any other way. We're talking about $5 trillion of bad debt out of China. Most of that money, approximately 3.5 trillion of that, is coming from North America, Japan, and Europe investors. That's going to impact all these institutions that have loaned and are not getting their interest payments and are going to be in default. It's a mess.
You're going to have major banks and major institutions declaring huge losses this quarter.
If this is not salvaged, and at the moment, the Chinese government have said we're not stepping in. All the international investors are restructuring their debt. They're selling off their bonds. They're selling off their debt to some of these distressed debt organizations. That will only last for a short period of time. This is going to hit the major markets. We're waiting for the impact. This could cause a worldwide recession. This alone. Why is nobody noticing? Why is this going untold?
So what would you do? Would you sell your stocks and go into cash?
Well, people are recommending to go into gold. Sell your stocks, sit tight. But we don't see any reaction at the moment. Today was another good day on the markets.
So what happened in 2008 is that you had a global financial collapse triggered by the collapse of Bear Stearns, Lehman Brothers, and the subprime market. So it started in the United States housing business, effectively.
Exactly the same.
And it wasn't a housing collapse worldwide. It was just a housing collapse in the United States that in the subprime market that really then, had, because of the debt, because of the investments, washed around the world. And, people were surprised that the Bank of Scotland, for an example, and Deutsche Bank, UBS had major positions in US subprime debt. And that's how it was sort of like a pandemic that it started in one spot, but quickly infected the whole world. Is that what you see happening here?
I see exactly the same thing. And you're speaking of UBS. UBS is a very significant shareholder in Evergrande, and they've arranged a significant amount of debt. They're probably the most exposed European bank. They're going to take a very big hit, probably more than any other institution in Europe.
So after the global financial, or in the global financial crisis, to insulate the economies and all of us from it, governments around the world had to become very lax with interest rates. We had this quantitative easing where the banks put more money into the market by buying bonds. You had deficits run up by governments worldwide as they put more money into the system and deficit finance like never before. But we've sort of used all that in the last year and a half because of COVID-19 and lockdowns, such that there's not much more that is left to do that, is there?
There's no more, there's nothing left. I mean, Canada is deeply indebted. All the jurisdictions around the world, having supported COVID, have acquired a substantial amount of debt. How are we going to fight this next big campaign of Chinese debt in default? It's going to affect the markets. Sell, sell, sell. I'm not sure what to say. I mean, we're waiting for a serious calamity. There can't be $5 trillion of bad debt that hits the market without some kind of major impact worldwide. But nobody is taking notice. Nobody's talking about it. Yes, the institutions are talking about it. It's all over the blogs. The major newspapers have small articles, but nobody's realized yet that this is a serious issue.
Mark, if people want to sort of just keep a watch, what's the best way for them to do that?
Well, I mean, what's being reported out of China is just gobbledygook. We're not getting any proper disclosure information out of China. Nothing coming out of China. No reports out of Evergrande. No reports out of any of the institutions. We're being left in the blind. I mean, we don't know what's going on. So some of the institutions that I'm working with currently have their own reporting, their own estimates, but we have no confirmation, no audited statements, no dependable financial reports coming out of China, nothing. So we're just standing here blind. At least with Lehman, we knew where investors stood. We knew what the amount of debt that was outstanding. We knew who the debt was outstanding to. We knew the same thing with Bear Stearns. Here we're blind. And maybe that's why nobody's noticing.
But you'll keep us up to date, right?
Well, I am following this story to the minute.
We're chatting with Mark Borkowski tonight. He's the president and CEO of Mercantile Mergers and Acquisitions, a Toronto-based M&A mid-market company, advisory company that advises people on purchases and dispositions of middle market assets. He's an expert in the global financial markets. He's watching Evergrande and the Canadian, not the Canadian, that's a Freudian slip if I ever heard one, watching the Chinese real estate market. And he's going to help us through this process. That's our show for tonight. Thanks.
Let's hope. Thank you very much.
Thanks for everything, Mark. I really appreciate it. Stay tuned.
Thank you, Brian. Stay tuned.
Okay. Thanks.
Thank you.
Good night.
Good night.